Okay, and good morning, everybody. And for some reason, I can't get the camera to work, so Julie's going to have to do the heavy lifting on the good looks department. Okay, so no silver fox today. So, so here we are, 69.92. I'm going to kind of start where we are and backpedal. Apologize for being late. No related things and whatever, just timing of life intruded. So, and the crows didn't even get fed yet, but the goats got fed. So we'll have to get to the crows later. But the bird feeder was full, so at least that's good. Okay, so these numbers were based on yesterday's yesterday's expected move, and so I'm going to have to redo this. This is kind of done after the close yesterday, so where the chop zones are, etc. But those of you that don't get my stuff don't have to think about it, and those of you that do will get a corrected one afterwards. Okay, so overnight we kind of topped out at 70.13, shot right up to the top of the 70.15. There's a positive gamma wall there, which we'll talk about in a minute. Now we're kind of pulling back into what should be the chop zone. Let's talk a little bit about yesterday real quick. And so yesterday we closed up 0.4%, Q's leading, IWM green, etc. Dow lagged because of UNH. I know a lot of people who got out of who bottom fed on UNH X number of months ago when it was in the toilet, that who legged out and got out before earnings. So far, I haven't found anybody that took the hit. So I know some people that were really kind of loaded up on that. So anyway, but I'm sure somebody took the hit. So let's talk about this. So yesterday, late day VIX popped a little bit at the end of the day. While it looked like vol up, spot up kind of thing with people buying, with maybe having to hedge the upside calls, when we looked under the hood, it was modest tail demand. TDEX was up a little bit. And then when we look at the, and that was my read before I looked at the decomposition index. And the decomposition index confirmed it. You know, I saw it on TDEX, which is based on SPY, and it's a different measure that doesn't measure the actual VIX components. But potato, we see downside convexity was up. Sticky strike drifted down and parallel shifted up. So basically, fixed strike vol increased and the surface shifted based on the movement. So nothing crazy going on here. Nothing crazy going on in the VIX. And with the FOMC, etc., it's, you know, to be expected. Markets up, so a little bit of a reach for downside protection. So that's why we had a little vol up, spot up ish, like tiny amount. So nothing to get crazy about. Sometimes a lot of people know the terminology and aren't sure exactly what it means and how to parse it. So I guess I'd throw that in for to give you some kind of context for that. So overnight, you know, like I said, we're 69.90. We tagged over 70.05. I thought we tagged, we weren't that high. So pre 2 o'clock, we have, you know, we have the before the statement. Volatility tends to just stay sticky. Expected move, the straddle price tends to stay intact. So for you premium sellers, it's not a great day. I don't sell premium on FOMC days, period, end of story. I don't have to attend every night fight I'm invited to. Can you get away with it? Sure. I just like the rapid decay I get in the morning from 9:30 or 10 until 1. Here, that it's just going to kind of stick around, you know. So we know, okay, so you know, basically my line, don't get caught on the narrative. Just walk the rails, see where prices are going to go. I'm sure he's going to show you the same thing. These are his levels, narrative, doesn't matter. These are the lines. Let's worry about the lines. Let's let the narratives, people get busy on Twitter. Okay, so tonight we have Microsoft, Meta, Tesla, IBM, ServiceNow, ASML, the Dutch semiconductor giant, and Starbucks, all reporting along with some second tier names. We had Texas Instruments positive reaction last night, spill over into semis and tech, etc. So the expected move now, or when I checked it, you know, an hour ago, whatever, put us at 69.60 bottom and 70.30 top. And so let me show you the out, instead of going through all this stuff and the whole if then. So let's go through the if then. If we're green on the day, so we're green now, if we stay green, then expect choppy gravity back towards 69.90, the pre-FOMC. If we hold 69.90, then 7,000's first decision. We know that. If we get above 69.90 and stay there, then let me actually show you what we're looking at. Okay. So here, unlike the way I usually do it, which is I just show you the net. Here I'm going to show you the actual what's positioned where. And at 70.05, we have over 2,500 market maker short, customer long calls. That's the magnet. Potential magnet, potential accelerant. Also, when we lose that, potentially pushes down. Okay, so that's sort of your. Now, if over 7,000, if we can slog through this mess, you know, from 65 to 7,000 is fishbone, frog in a blender, green, red, up, down, sideways. It's a mess. If we can get over 7,000 as we're chopping around there, we have a ladder up. Now, I prefer the ladder to be constructed differently with a larger strike on top, because this is going to suck all the oxygen out of the room. And maybe you get up to here, then this starts pushing you down. And if this goes out of the money, so for a clean ride up to 70.25, a better profile, not that I get to choose my profiles, would be to have this larger strike 1 or 2 higher, kind of a more graduated ladder. But I got to trade the profile I got, not the profile I wish I had. And so that's what we got. So tagging 70.05 in the real-time session, printing 7,000 officially in the real-time session, I think is probably destined to happen today. Whether we stay there, whether we close there is another question. But we're like 5 or 10 points away. So WTF, we're going to go there. And so we have the 65 to 7,000, really, this big choppy mess. Below 65, which is kind of at the bottom of the expected move, or below 50, round number. The whole area is kind of supportive. We don't really have a lot of put buyers here. We have some put buyers at 69.70. Okay, so that would kind of make sense, you know, slightly out of the money from yesterday's close. We have some kind of in this range, but when you net it out, it just kind of looks like this. So we have 65, 80, fly looking thing. We have 87,000 resolve somewhere in the middle. We have 7,725 resolve in the middle. Below 65, it looks like we shouldn't go much below 65. Maybe we go down to 50, whatever. We have this pretty solid wall down there. And that's basically the short version. I'm gonna turn the screen over to Chewy, and then we'll go on to vol traders here today.
All right, guys, good morning. I have something pretty similar on the docket for my kind of trading today. First, I'm looking to see, can we hold this pivot into open? How, not too far from it. I prefer us coming down before open into this kind of 7,000, 7,005 area for a move back up to pivot. If we can hold above pivot, I'm looking for another all-time high. I personally don't think we can hold that, but if we do, I think we have a nice kind of extension move up. That's kind of plan A. If plan A doesn't hold, plan B would be to try and short everything all the way down to 69.55. That would be a more aggressive sell-off, but I think all of these bounces in between will be short-lived. Main thing I'm watching is if we can break below 7,005 with some speed. If we can, I really do think target 69.88, 69.70, but hold some runners for that 69.55, 69.60. I'm quite surprised that the setup looks this clean, if I'm honest with you. But kind of have to, like Doc said, you just have to trade the profile what's in front of you. I was expecting a little bit more of a complex setup for today and don't have it. So keeping my expectation at bay.
Vol trader, good to see you. What you got going on? Let me put you on the stage.
Yeah, hi. So I've been up for a couple of hours. I caught that expected top. I thought it would extend to 7,020, 25-ish type of before the short would come in. I'm seeing the market starting to top here. So it might be today, might be this week, but it should give us a nice rotation down. I don't know if it comes in today. There's the FOMC thing that maybe, I don't know. But I mean, we're topping here, so I think any extension higher will be actually an opportunity to sell the market. And I have some major resistance popping up here in my data on the SPX at around the 7,025, and on the Qs right above where we are.
You don't have any thoughts for us today?
No.
Okay.
6,038.40. Sorry, 638.40 on the QQQ is like the main resistance where I would like to start selling the market. If we get there, we already had like front running on the sell side. Like we didn't touch any real resistance. We were just close. It's as if they radiated already. So they pushed everybody in the Globex. The machines run up, wiped out all the stops and stuff. I saw that in real time. And as we pushed up, the IV went up 2 points about on the
Call skew?
Yeah, totally call skew. But I'm looking at 0DT and 0+1. So, sorry, from today till Friday. So that complex spiked up during the Globex, indicating some shorts that were there, and people were rushing to buy the calls at the top. So that shows, there are some positions there out there that are already short, or that the market is getting to the, if you think about the payoff of of a strangle, right, that people build throughout the month. So the market is getting, as it approaches 7,020, it already is approaching the edge of the positions that were accumulated throughout this week or throughout the months, and that's why we saw that spike in the call skew overnight in the futures and in the SPX. So actually less in the SPX, but much more so on the Nasdaq, on the NQ.
Yeah.
Actually, I want to show everybody something. So you talked about, okay, this is the wrong thing. I need SPX over here.
And while you get that up, Doc, I see the same thing that you're seeing on the Qs. And I actually think a good target, if you are buying puts on the Qs, I like 628 as kind of the end of this move. This is kind of, I'm seeing the
626-ish, 627, we'll call it 628. It was an October kind of gap over there, and then we kind of had, once we fell now, we had trouble getting over that October level around there until we finally did yesterday. So that area, call it 28, 26, 25, would be a good, just technical price level to at least recede back to, or call it.
And there is a 4-hour gap there again. So I think that would make sense too.
Okay, so what I wanted to show you, so Vol Trader was talking about the strategy, was kind of talking about it more from sort of like, I don't know, institutional level, for lack of a better word. Like, this is what was priced in, whatever, a week ago, a month ago, and this is sort of where we're going. The straddle move has been used up, so to speak, or not. And so this was last Friday's straddle, so Friday to Friday. And you see the top of the straddle was 70.22, based on this calculation. It could be 5 points higher or lower. But the main takeaway is we've kind of used up the move. Now, can we go higher? Oh, yeah, here we went higher by a few points. Here we undercut it by a few points, a couple weeks ago. So they're not set in stone, but they're pretty good guardrails. They're pretty good guardrails. Big money is kind of parked around these levels. Is that accurate, Val?
Yeah, of course. I mean, the market expresses the expected move for the duration of the IV you're looking at. So if you come at Friday, so in 2 days you come in and you check, by the end of the day, what is the expected move towards the next Friday, right? So the options express the maximum efficient expected move that they know, that market participants know at that time. So that pretty much captures a week forward. And if there's no major news that were not there before, the market would most of the time remain within that range. And even if you have some like those red bars last week, that red bar last week that went under and then bounced back up.
Right. So yeah, we ended up back inside it. Yep.
Yeah, those of course can happen, but if you check where the majority of the trades were done, then 70%, 80% of the trades of the volume was done within that range. So in that sense, you will never be free of not hedging, right? You always need to do some type of hedge, but most of the time you will capture the movement within that range. So you're showing now 7,022 as the upside for this week, right? And we can see also the previous weeks were all around,
right around here, give or take.
Exactly, yeah. So let's say between 720 and 740 or so, right? Yep. I guess that is pretty embedded into the market for some reason, and until that is not really breached, that will be significant resistance. You showed some stuff in your analysis of the positions, and I have it on my end very cleared that 7,025 up to 35 is like some major resistance today. So I don't expect that. I had that same level yesterday at 69.80, 69.85, sorry, which we saw yesterday. That was like, it
That
was
was there
struggling all day with
yesterday.
that level.
Yeah, that
And
was there yesterday, and it rolled up toward the end of the day just on daily positioning. But yeah, that was the
yeah,
level.
basically the market is so bullish. You have so many calls that the market actually can move more freely, not during the cash hours compared to the cash hours, because the gamma is so huge there that it's very difficult for it to push up. It's as if everybody's sitting in these out the money calls, but nobody's buying up to that level because everybody's long from that level. So, they won't buy more into the level. So you're lacking some energy to push those strikes. Everybody's waiting, let's say 7,020. They wait for the market to get there to be long. That's basically what it shows.
Well, wait a
So
minute.
yeah.
I was long 695 SPY from earlier. So we went through my levels. Now I'm just gonna close it out. I closed them out yesterday and close them out today.
Yeah, so today we have the FOMC, and we also have a bunch of Max 7 reporting after the market, right?
Yes.
Yeah. Tesla,
We have,
Microsoft, and Meta.
Yeah, let me find what we have. Microsoft, Meta, Tesla, throw in IBM just for good measure. Throw in SML, ServiceNow. So it's on. It's on, And really, I would think that the FOMC, I think, is going to be in kind of a nothing burger-ish, comparatively speaking. We know they're not raising rates. We know there's going to be some kind of mumble about data dependent and the job market is this and the economy is that. We got to wait and see, blah, blah, blah. I imagine there's going to be questions to Powell. Is he going to stay on and finish out his term until May next year as a governor? But I guess how it works, he was a governor, then he was made chair, but he had a term as a governor. So he could stay or he can go and become a CNN commentator or get on some boards and make his, extra $20, $50 million. This kind of depends. He came into this thing, a former Wall Street guy, so he's probably okay. So I don't know if he's going to stay just to stick it to Trump, so to speak, or out of a sense of duty and honor, I don't know, or if he's going to ride off into the sunset, So, but I think what the market is waiting for, and, far be it from Trump to grandstand, and especially if Powell says something he doesn't like, to announce the Fed chair, which now the betting market says is Reader, I'm not sure how you pronounce his last name, Blackstone. Love the guy, been in that stock for a long time. He's made me a lot of money. I hope he becomes the Fed chair and continues to make me money just from a self-serving point of view. Inflation can kick down the road, I guess. I don't know. I'll worry about that 2 years from now or a year from now. In the church of what's happening now, it will be a good thing. Mm-hmm. So, so that's what's going on here. So really, I would say 65 to 90 boxes noise. Let's look again. Let me look again at where the noise is.
Do you guys think that the earnings happening today will kind of set the tone, or do you think the market will still wait for Apple tomorrow?
I mean, each one has a pretty big weight, the ones coming today. So who do we have?
Today we have Tesla, Microsoft, and Meta.
Okay. So Meta and Microsoft are big because those are laggards comparatively speaking. And there's parts of the narrative that are yet to be flushed out, where there's disagreement, so to speak. How much it's going to affect software. Is Meta spending too much on the whole spend build of AI infrastructure? So Meta being a proxy for that narrative, and Microsoft being a proxy for the other side of that narrative, and how much are they spending on building data centers? What kind of orders do they see? All that. So there'd be a lot of read-throughs from those two. Apple is kind of its own animal. Apple is sort of its own animal. That's tomorrow. Yeah. So, which brings us to. Hold on, let me show you this clever thing that one of my subscribers did. So I wrote something about dispersion the other day, and through the magic of AI, we have when correlation is low, like it's immobile, one thing moves, the other thing moves. And so what we could easily see is, Microsoft swing that way and Apple swing that way, and everything, and we watch VIXEQ, the equal weighted VIX, and see, does that go up or that go down? I have a whole little guide for that I worked on, but we're not going to talk about that now. That'll be in a note or something. I already put it in a note twice. So what we're going to want to see, just kind of as a look ahead, since we got a little time here. I showed this yesterday, or this is something else. This is the VIX. The VIX equal the VIX constituent volatility minus the VIX, just a simple calculation, just to see where it is in the band. It tends to get, when we tend to get up here, we tend to get toppy. But this is still work in progress. I haven't gotten it the way I wanted, so grain of salt on that. Let's go to my normal one, okay? Where's the one I'm looking for? Here we go. Okay. So here we have dispersion, and then it's mirror image twin correlation. So correlation, do things go up and down together, or do they move separately? On the mobile analogy, we want them to move separately. As long as they move separately, the constituent volatility kind of gets absorbed in the wiggles. Let's think of VIX as the anchor, or as the, and market movement as the hook on the anchor. So what we want to keep our eye open for is what happens to the constituent volatility as earnings season plays out. We expect it to come down. So we expect to see, do we see correlation start to move up? That could be a negative. Or do we see correlation stay within this 8 to 9 range? Now, where it is now, 7.7, it's kind of historically really low. When we're down here, that kind of tends to be toppy. So a few people talked about the toppy narrative, and this kind of supports a toppy narrative. Now, it doesn't mean that we have to go crashing down. It could mean a 1% pullback, or it could mean consolidation over time, just kind of chop. So, this is something that we're just going to keep our eyes on as earnings season progresses. Just a new tool that I'm working on trying to perfect. I can look at it qualitatively. I'm trying to get a little, which is what I usually do. I'm just trying to get a little better handle on the ratios and the relationships. VIX 9-day is kind of normal. VIX 9-day is kind of muted. It's about a 0.8, 0.9% with the FOMC. The VIX 1-day, which I think is a shitty measure, gave about a 0.6% move or something. It was around 10. So 8 would be a 0.5%. So it's about a 0.65% move. So that's what we got here in the volatility space. Just simple. This is another toy that I use. The VIX. The difference between the VIX and the VIX futures and the VIX futures the second month, and a little ratio of that, and we can just see we're kind of in the middle of that. And again, when we get to the top here, it tends to be a danger, Will Robinson sign. Tends to be a danger sign, not always. I tend to like it. I tend to like this sign better. When we get to these extremes in VIX, that's or in the VIX in the volatility complex, those are good longs. I think they're better longs than shorts. Okay, so that's that. I think that's basically it. I have a doctor's appointment today, by the way, at 1 o'clock. Go ahead. Yes, Val.
Doc, what are you showing? What is the lower index or values that -3, -1? What is that?
So this is just like a what are we going to call it? A percentage, like a band, a Z-score kind of band. Of the lower indicator. This is just a way to visualize.
What is the index within the bands?
Yeah.
Oh,
yeah, the index within the bands.
Okay, VIX minus the future. Oh, I get it.
Right. VIX minus the VIX future, and then VIX minus the next month out future. Does something, and like I said, most of these I guess use qualitatively. You kind of look at it and eyeball it and see where it is historically. Oh yeah, look at that. That's when we tend to bounce. Oh, look at that. That's when we tend to bounce. Oh, look at that. That tends to be toppy. But we can ride the top a little bit. See, we kind of ride the top a little bit. But then eventually we have what we had a week or two ago, whatever that was. And then we rode the top a little too long, so we went down a little too hard and bounced a little too soon. The mobile was unbalanced one way, and then we got unbalanced the other way, and now we're in the middle here. It's just in the vol space, we're kind of not crazy. We're kind of in the middle. Nothing nutsy going on here. VVIX around 100-ish, with VIX around 16.5-ish. Nothing unusual in these ratios or in what's going on here. Nothing unusual. What is unusual is that the market seems to be okay with the potential war or military action or whatever in Iran, whatever. I don't know if anybody else has been paying attention, but everyone's been paying attention to the volatility of silver, which is like 200% or something nuts.
Yeah, but the market,
somebody's going to get hurt sooner or later. But I don't know if you've been watching oil volatility. Oil volatility is spiking too. Straits of Hormuz disruption, whatever it is. So there's stuff going on under the hood that the market, at least the indices, seem to be just like, okay, well, whatever. So yes, go ahead. You have a comment about that?
I think there's a lot of liquidity injected into the markets from various stealth ways. You can see it in the fact that you basically most of the time can buy the straddle and make money, right? So it's like, they know how to price to the dime if they want to, but yet they give you a cheaper straddle towards the intraday volatility, right? Almost on a consistent basis. So it's basically an indication of increased liquidity. So there's increased competition to try and participate in that mechanism of the options. And I think the market is getting more and more smart, and if it can express the stress very accurately, meaning the SPX will be completely careless of the Iran thing, but as you said, the vol on the oil will express it much more. So,
Be
but
much
that is
more
more
clear to
accurate.
see
That
there.
is
Yeah,
accurate, right? I mean,
right.
the vol should be around the oil, not around the stocks, because as much as we know from previous frictions with Iran, I mean, nothing really happens with that country, and if the U.S. wants to break it down, it will break it down, right? So I think in that sense, between increased liquidity that is available and is observed by the fact that the straddle is cheaper than the intraday volatility, and the fact that you can express more accurately through other sectors the stress, between those two, the market is pretty much doing what it does, right?
So
They
now,
don't care.
speaking of liquidity, shifting gears from liquidity just to CTAs and pension funds and all that. I mentioned it in a note the other day. I don't know if I talked about it, so I'll just talk about it a little bit here. So according to whatever guru I read, and these guys know whether it was Bank of America or Goldman or Citadel or whoever it was something like 65 trillion pension fund rebalancing to buy the end of the month. And that's 55 billion. So, or 165, whatever. It was a big number. I think it was maybe 165. I got it in my notes somewhere. So the point isn't how many billion. The point is buying coming in at the end of the month is going to support the market. Vol control funds are, and CTAs in general, are kind of full-ish. There might be a little room to buy, to sell. But other than real short-dated ones, no real selling starts on, I guess, the SPX short-dated ones. Again, nobody really knows. Everybody's got a different algo, but the algo's just kind of like evolution at the speed of thought. One algo smells the other algo and kind of tweaks it a little bit, but they're all variations of the same themes. And so some say, so 69, excuse me, 6,750-ish seems to be one number that comes up a lot. Another number that comes up a lot is the 50-day moving average, obviously, the 20-day 6910 for some shorter term stuff. But basically, the market is supported by that as well. Unless we break or volatility goes nuts. I saw one figure that within a 1% band, volatility control funds will be buying either way. So 1% up, 1% down, they have room to add allocation. So
There's limited downside. You're saying there's limited downside, yeah?
Yeah, limited downside unless something breaks, and then we get like a 2-3% move like we had last week, But yeah, it looks like limited downside for now based on what we see. So
okay.
What's my limit? 6910. The 20-day would be my first, level to look at, and that's more than 1% down. What was that? So 69. Oh no, it looks like it's moved up at 69.17, 69.20. That's the first level to keep an eye on, and 69.15, whatever it is. Then the 50-day is now moved up towards 68.50, round number. We had a gap at this level way back when. So 68, 50, 40, 6,800 round number. And if not, we have to kind of look back in history to find this 67.50 level. And of course, there's McMillan's famous December low, 67.20 close. As if that breaks, then we're in for a bit of a rough sled, not just from that breaking, but going forward for a while. If.
No, but either way, there's no evidence the market. I mean, other than what Shui said, that he's like compared to us is much more bullish, much more bearish. But there's no evidence that suggests, other than a local top, which can happen any given time in the chart. We can see those. There's no real evidence that suggests like a big move down coming.
You're right. You're right.
Right. So and we trade what's in front of us, not. So yeah, we could do the expected move down, sure, but shouldn't be more than that.
And so just for fun, and then I'm going to shut up. If we look into the February expiration, and let's see where the bodies are buried. At 68, 55, 50, we'll call it. So 50 and 68.20. I mean, it's 3,000 contracts. It's not a huge amount. It's something. 6,900 a little bit. Okay, so we have something somewhat large here. We have customer long calls though at 69.50. So kind of right where we are. And so when you look, there's really no, so 67.50 into February, and then beneath that we have sold. So there's really not a lot of potential fuel. That doesn't mean the fuel doesn't materialize, but you're right. Looking at what's in the options complex, I don't see a lot of potential fuel. If anything, I see more fuel
to the upside.
To the upside, yeah. Potential energy, not kinetic. Yeah. Potential energy.
Yeah, this is the evidence in front of us. So the FOMC could shake up things. Maybe if they start to do some type of, I don't know what, like talk about how they push back on the president, and maybe.
Or if they say inflation is coming in, I don't know. I don't know what they're going to say. And it doesn't matter what they say. If I had it in front of me, I wouldn't know how the market reacted anyway. That's the exact statement I wouldn't know.
Yeah. And then we have those earnings this week from, next week from which
That's a big wild card.
There's no reason to expect other than Meta, which is shit. But there's no reason to expect one of them surprising to the downside, right?
Well, I think Meta, all the negative news is priced in, so they can only surprise to the upside.
Okay, so they're not even Meta. So, right. But maybe tomorrow things will change. As of now, we're just seeing a cap to the upside, and but nothing more than that.
Yeah, well said. All right, I'm going to wrap it up now. Thanks for the commentary, everybody, and people listening and my subscribers. Thanks for tolerating a somewhat shitty, hastily pulled together note today. I'll admit, it's kind of pulled together the last minute. Whatever. Woke up late and goats and this and that, and the laundry was done, so I didn't have the right base layer. It was just kind of a confluence of little things that made me late. All right, take care, everybody.
Good luck, everybody.
Bye-bye.